Recording. Go live. Do 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 do. Take my breath away. What is going on? What is going on? Happy Saturday night, man. Listen. If you guys are locked in on a Saturday night and you're here back testing with me, then I know you guys are serious about making it in this business. That's number one. So let's let this stream fill up. Let's let the stream fill up and let the people come in, and then we're going to get into some back testing. We're going to get into some chatter. We're going to get it going, chat. Welcome in, guys. Welcome in. Happy Saturday. Happy Saturday to every beautiful person coming into the live. Happy to have you guys here. Listen, so I was going to do a live Discord Q&A. Unfortunately, the Discord fell short. I said I wanted 50 reactions on the post. We got 37. Well, actually, it's more than that. We got like 40 something. But I said 50, and instead we're gonna do TikTok live. It will be recorded on why can't I speak? It'll be recorded for YouTube too. So everything will be out there. Everything will be out there. Look at Trump coin. I guess we can go to Dex Screener. We want to start off the day looking at Trump coin. I guess we can do that. Trump coin is just not doing too well, man. Where the heck is it? It's not even on here. Where is it, bro? It fell off bad, didn't it? Yeah, here it is. 31 bucks. It's not looking too good for Trumpy, for Trump coin. We need a bounce out of this level, and we need to bounce quickly. We need a bounce out of this level, and we need to bounce quickly for Trump coin, guys. All right, guys. So I want to get into some back testing. I want to get into why this was one of the best trade setups of the week. So let's get into that right now and just break down why this trade setup was one of the best trade setups of the week. Now, the real magic in this trade setup comes when we're looking at the 4-hour time frame here. So when we have this confluence on the 4-hour time frame, when we have an SMT like this, the model on the lower time frames is very high probability. I would say that it's upwards 70%, if not higher, when you get all of this, all these factors to play out. A lot of things need to happen for it to be a higher than 70% success rate, but when it happens like this, it's very, very, very high probability. So number one, we're looking for an SMT at a major key point swing high here. And that's the first thing we get on NQ, guys. We get this high does not get pierced at all. It makes a failure swing high here. That's the first piece of the puzzle. Failure swing on NQ. We hop on over to the ES chart and we can see that ES then takes the high. Okay. So this is a 4-hour time frame. Now, when this happens on a 4-hour time frame, it makes the trade higher probability. I'm actually explaining a valid SMT right now, so pay attention to that because this is literally one of the most important pieces to trading a reversal pattern like this. So ES takes a swing high, NQ fails to take a swing high. We have a major SMT at a major swing high point. We mark it out with our SMT right here. You guys can see this over on the TikTok channel. So that's our SMT. Fails to take a buy side liquidity, okay? That's key to the puzzle number one, right? Now, we drop down on a 1 hour time frame. This is a top-down approach, guys. I want you guys to understand how this works top-down. Here's our major SMT over here. Now, I want to show you this. We're going to go from the 4 hour to the 1 hour, and then we'll drop down to 15 minute, 5 minute, 1 minute execution. So on the 1 hour time frame, we get a beautiful 1 hour buy side liquidity sweep, relative equal highs sitting here. You guys see this? See these relative equal highs? Market draws into those relative equal highs, takes that liquidity, and then that's when our trade setup presents itself, right? So also, no, there wasn't a fair value gap here on the 1 hour. There might have been one on the 15. Let me see. Yes, so there actually was a gap. That gap got filled already though, but there was a bearish order block right here too. So there's a lot of confluence for this trade, right? We got a 4 hour SMT, we got a 1 hour liquidity sweep. We have a 15-minute order block, 15-minute bearish order block. All of that happens right within that level. So let me just mark this out as the sweep of liquidity, because that's the first piece to... Hold on a second here. It's actually, this is not the sweep. I forgot I rewinded price action. This is gonna be the sweep coming up here. Okay. So that is the sweep right here. Here's our relative equal highs. Market sweeps liquidity, right? So people's orders were resting up here. Again, remember what we have though on the higher time frames already, guys. We already have a 4 hour SMT. We've got a 1 hour sweep of liquidity. Now we have a 15-minute sweep. Okay. So once we get the 15-minute sweep, we now get a displacement off the high, which is a big... Can you guys see my lines? Hold on a second here. You guys might not be able to see that. Can you guys see this line right here? You guys can see this? Okay. So once we take this liquidity here, we get a market structure shift. Now, on the 5 minute time frame, this trade looks a lot better to me, and this would have been executed for me on the 5 minute. Well, we would have drawn it out in the 5 minute, execute on the 1. So now that we have our sweep liquidity chat, really clean high, we get swept here. What are we looking for next, guys? We're looking for a change in the state of delivery, right? So here's our change in the state. It's gonna be right here. We're gonna mark that out. CISD stands for change in the state of delivery. Okay. Now, what does that mean to people that are new? To people that are new, what that means is that the market is now delivering to the other direction. Instead of it being bullish, we're now flipping bearish. It's a change in the state of the way the algorithm is delivering, right? So once we have the change in the state, that for the model that we trade here on the channel, the same as this CHOCH. I forget what that stands for again, bro. I know what you're talking about, but I forget what that stands for. Okay, so guys, now that we have a change in the state of delivery, we're gonna draw out our breaker block. How do we draw our breaker blocks out, chat? We use the two, well, it could be one candle, but in this example, it's two candles, the two lowest down close candles before the leg up. So here's the leg up. Here's the two lowest down close candles before the leg up. That took liquidity right there. Okay, that's our breaker block. So what do we have so far, guys? We have a 4 hour SMT. We've got a 1 hour liquidity sweep. We have a 15-minute liquidity sweep into a 15-minute order block. Then we have a 5-minute liquidity sweep here, a change in the state of delivery, which forms our breaker block, right? Now we have like everything forming right now. We're like every box that we need to have checked is like 1, 2, 3. We have 4 or 5 boxes checked already. Okay. So from here, it really becomes very simple. We identify the setup. Now we have to execute the trade and put on risk. Okay. Also, to mark out, to notate, guys, we do have a unicorn sitting here. This is a unicorn breaker model. There is a small fair value gap up into here, which makes this and classifies this as a unicorn. Are you guys familiar with unicorns? Yes. Okay, everyone's familiar with unicorns. So now that we have all this, guys, that's how we're going to frame our trade, man. That is literally everything we look for. If you guys can identify this trade setup, I'm having coffee. It's like 8 o'clock. Coffee to stay focused, I guess, for the chat. But inverted fair value gap got ran through, wait for a pullback at the equilibrium and go short. Yes. Yes, we have a small inversion right here. Okay. We have a fair value gap here. What we're going to wait for next, chat, is very simple. If we're taking a sell order here, can you do limit sell? Well, why can't you do limit sells here? I'll just change it. What we're going to do is we're going to wait for a pullback in to the breaker. Waiting for a pullback, very patient. We don't prematurely get in, right? We're waiting for a pullback. Now, a lot of people are getting impatient here, guys. This is a part of trading right in this area. I know so many people getting impatient. Very, 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 very hard not to be impatient here, because like let me peel this back. You've gone through like 4 to 5 layers, okay, of stuff that's checking off the box. I can understand why you would be interested in shorting this right here. And I wouldn't really be mad about it. But in my experience, I'd rather wait for price to come either into the fair value gap or into the CE of the breaker, because you're going to get a better RR. All right. Again, I am recording this for YouTube as well, guys. So if you guys want to go back and study this, this will be on the YouTube channel. Yeah, a lot of FOMO is going to happen down here. Like, I know so many people that are just going to want to be like short right here. And honestly, like I said, I don't have a problem with you going short here. I really don't, because this is part of the model. You're actually supposed to be shorting off of the breaker when it comes back into it. I just like to wait because I've traded this model so much. I know that you're probably going to end up getting a better entry. So let's just go through the price, what it does here. Now we're digging deeper into the breaker. Boom. Right there is CE of the breaker. So your order should already be ready. So let me pull this back. Let me select bar here. We want to go short. We want to go short on this bar. How do we do that? No, that's not the entry I would take. It would work, but let's go short on this bar here. Right, we're shorting here. Right. So stop loss is going to be, we're risking on this trade with two minis, we're risking like 940. And we're going to target these internal lows down here. Honestly, I would probably start taking money off the table at this low. I would take then money off the table at these lows and then final TP down here. But I don't think you can split it up like that. Can you guys? I'm not sure if you can split it up like that with the back testing. Anyway, that's the trade model right there. That's how I would execute it. You guys can see that on the screen. And let's just get into how that ends up playing out. So basically take no drawdown, instant profit, up like 1900. Okay, so wait, let me pause it real quick. As you're going through this trade, right? And we're working through it. You guys want to be marking out significant gaps on the way down, right? Because you want to see these gaps get respected. So we're looking at 1 minute fair value gap here, right? We want to see price respect through that 1 minute, respect it, right? To the downside. We want to see bearish order flow. So make sure when you guys are actually like trading that you're marking out your gaps on the way down, your inversions, your changes in the state of deliveries, your order blocks. So you basically can just guide yourself through the trade. You want to guide yourself and make sure that those things are being respected. Okay, so let's just continue on here. Trades ripping lower, 4K. Now, at this point, I would take at least a mini, or if I'm trading micros, I would take at least half the position off here, right? Stops at this point will be break even. So this is risk free. I probably would move stops like above this swing high. So stops right now are at $820 in profit, and then just let the trade run. Let that trade run to TP, and then bada bing, bada boom, full TP there, plus 7 racks on that. So, yeah, that model right there, guys. Like I said, if you can find that model, and again, it's not going to be there every day, but if you can just trade that model right there, you can make a very, very healthy living. And again, I'm like literally giving you this stuff for 100% free. So the best that I can ask for you guys right now is to tap the like button on the TikTok, join the Discord, watch me trade live for free. I don't know how much more value I can possibly be giving you guys, but if you appreciate the content and you're learning something, just help me out, because that helps a lot. So the sweep is on any primary low or high. No, it's not any low or high. That is a big key to the puzzle. It has to be a significant low or high. And when I say that, it's stronger when it draws into a higher time frame liquidity pool or PD array. So in this example, this 15-minute sweep, we had a failure swing, first of all, in the higher time frame, the 4-hour SMT between ES and NQ. That was a big part of the puzzle. But then when you look at this order block up into here, we get a sweep of this relative equal highs on the 15-minute. We get the failure swing at the highs between ES and NQ, so that helps a lot too in this trade model. We have a 50-minute order block up here, so there's a lot that's significant here. It can't just be like any random, like, because this model, you'll see this model form in a bunch of different areas, but it has to be significant swing highs, swing lows. And if you can find a manipulation into a higher time frame liquidity pool, like for example a 1 hour or 4 hour, then this becomes even stronger. So yeah, it can't just be any low or high. It's gonna be on YouTube. Daniel, thank you so much for the gifts, man. I appreciate it. Thank you so much. What are your thoughts on long-term futures trading? I don't long-term futures trade because the margin requirements are pretty high with the brokers for long-term futures trading. So I'd rather recommend you guys do options for longer term stuff. You do have to deal with the theta decay, but yeah, I mean you can trade long-term options. I'm a day trader though, so I'm not looking to hold positions too long. Like for example, this trade right here, from entry to exit, this takes about 3 hours to deliver. So $7 grand in 3 hours is not too bad. Huh. What do you think about ICT strategy? ICT is the one that I learned from. A lot of this is ICT. Change in the state of delivery, breakers, fair value gaps, liquidity sweeps. This is literally a big part of the 2022 mentorship. So yeah, ICT has paved the way for a lot of us to make really good money and do this thing for a living. I started trading in the Forex space in 2016. Had no idea, was trading like EMAs and resistance and support levels. I actually made a lot of money somehow and then lost it. Beginner's luck, call it. And then ventured into options, then ventured into commodities, then ventured into stocks. And I found a home in futures. I just love, and then obviously I taught myself and went through that whole course with ICT. And ICT is great, but there's a lot of fluff. So I'm trying to dumb it down for you guys on more beginner level in order to be like, hey, like this model right here is really all you need. Like you don't need all the other stuff. You don't need all the other fluff. You can literally make a living on this model right here. Like if you make 7 grand on 2 minis, right? That was 2 minis I traded. 7 grand on 2 minis in 3-hour time span. You don't have to take a trade the rest of the week. I have a Discord, guys, where you guys can learn. I literally trade live on the Discord, market chat in there with other successful traders, live commentary, live trading, prop firm guidance, crypto charts, like everything's in there, man. We have been growing at a rapid pace. We have 561 members already, and I'm super blessed to be doing this for you guys. Give you guys a little background on me. I have been private away from all of this for a very long time. I wanted to obviously become successful doing this before I wanted to go teach people about it. And now literally, I think I started my TikTok page like a month ago, and you know, I'm out there actually teaching people how to trade these models. So this model right here, I don't have a name for it yet. This model to me is my favorite model. It's the highest success rate model that I have back tested myself. And I highly recommend that you guys join the Discord and join these TikTok lives and gain value out of this, because I wish I had this when I was learning. So, it says free on the screen. Was somebody asking a question? I am barely starting being profitable. I'm itching for the market to open. Guys, another part of trading though, man, is your psychology, man. Like I will tell you guys from firsthand experience that if you don't have a good psychology, if you don't have a good mindset, if you don't have a strong mind, it doesn't matter what the hell I teach you. You will overtrade, you will tilt trade. You'll over risk, you'll FOMO in, you'll FOMO out. You won't hold your winners long enough. You'll cut your winners short. You'll hold your losers too long. This is one piece to the puzzle, is the model. But I'm telling you right now, this doesn't mean shit if you don't have this. This right here, and I just posted a video on this, guys. If you don't have your mind correct, it doesn't matter what I teach you. Trust me on that one. Okay, so I want to go into another model that people could trade that's a little different. It's a little more dumbed down, I guess I would say. It's an inversion fair value gap model. I like this model. It works when used correctly. And I'm going to teach it to you guys right now here. So let's go back to over here. We'll delete this for now. Flatten that trade. Okay, so what is an inversion fair value gap? An inversion fair value gap is simply put, it's a fair value gap that has been inverted. Very simple, right? So I'm just going to point one out on the screen real quick. There's a small one right here that we can just use as an example, and then I'll go into an actual trade setup of it. Right here is an inverted fair value gap. But let me just mark it out as a fair value gap first. Actually, let me replay it back because it'll make more sense. Okay, so right here in the middle of the screen, guys, we have a 1 minute fair value gap. Do you guys understand what that is? Type yes or type no. I want to see how many people understand what this is and who I'm speaking to. Somebody said just hurry up. Can somebody ban him? No. Okay. So let me just explain what a fair value gap is. So a fair value gap is basically a point in time in the candle structure where price was not offered in one direction. So for this example, guys, I'm going to make this a little bit more visual so you guys can see. This wick of, okay, so we're looking at 3 candles here, right? We have candle number 1, candle number 2, candle number 3. We need 3 candles for this, right? We're going to use the wick of the top wick of the first candle and the bottom wick of the second candle. This right here, this area in between those 2 wicks is our fair value gap, which means that price was never offered on the sell side of the curve here. There was only buys being offered. Okay. So this is a buy side inefficiency, sell side imbalance, which means there's an imbalance in the marketplace. Write this down. There's an imbalance in the marketplace. What does the market want to do most of the time? Wants to rebalance the marketplace, right? It wants to offer orders in that area at some point because that's what the market does. It moves from liquidity pool to liquidity pool to liquidity pool, so on and so forth, right? So now that's a fair value gap, okay? How do we use it? In this example, we're going to be trading an inverted fair value gap, right? Market comes up, sweeps liquidity on the 5-minute time frame. Okay. Sweeps liquidity. We have all the other factors we've been talking about in the stream so far. We take a swing high, we pierce it. Now we wait. Next candle forms. Boom. Okay, now on this candle, you guys see what happened there? The market rebalanced the gap, but it pierced it to the downside. That now becomes an inversion. An inverted fair value gap. Fair value was offered. The market didn't support it. It broke through it. Okay? Now, how do we trade the inverted fair value gap? This one's very simple. This is simpler than the other model. Okay? Now, how do we trade it? All right. Well, let's drop down here on let me bring back the candle bar. I want to use it on the next candle. Okay. Once we get a 5-minute closure on in this example below that gap, that is going to be our execution. Let me see if I can get it perfectly. Okay, so we get a 5-minute closure. Now, I would have entered this probably, let me see if there's a 3-minute gap here. Yeah, see, I would have entered this on a 3-minute time frame instead of the 5 because the RR would have been better. Let me bring this bar back. On the 3-minute time frame, there's the same thing happens. There's an inversion there. I would take a short setup like this. Once that candle closed, I would run the stop loss at the swing high here in this example. In this example, I wouldn't run too minis because of the RR being a little bit too. I would take this down. Hold on, let me change. Can I change this? No. Let me flatten that trade. We're gonna make this a 1. We're gonna use 1 mini here. Stops are at the high, so I'm risking about 820 bucks on this with a TP down here at TP1. My real final TP on this trade is always going to be this low down here. So we're risking 820 to make 3,600. And that's literally how you trade the inversion. That is literally how it works. We wait for a high to get sweat. We wait for an inverted fair value gap to form. We execute the trade. And bada bing, bada boom, we let the trade play out. Somebody said shorting this is crazy. I guess I'm a crazy man then, my boy. I guess I'm a crazy man. So the inverted fair value gap model, you don't need as much as you do in the breaker model. But the inverted fair value gap model, in my opinion, is a little less probability. So use them how you want to, but they're both very good. Sometimes the inversion model is going to be better than the other, than the breaker unicorn model, and vice versa. That just needs to be, you got to be reading that like in real time on the charts. So yeah, that trade ends up delivering a banger, like, what is this, like 3K here? At this point, stops are break even, right? Risk free, and then boom, it delivers sell side. And yes. So a big part of this, guys, and what people don't really understand is that when you're able to identify your draw on liquidity, things become a lot easier. A lot easier. In this example, right? Let's bring it back because I want you guys to understand like why this trade did so well is because the draw on liquidity was very clear. Okay, let me just show you something. This is a little bit more advanced and I don't really feel like answering too many questions on it, but when you see all of this down here, you see all that? What broker do I use? I use Tradeovate. I just started learning this. Then the algorithm literally sent you to the right place. Guys, all of this liquidity down here is called low resistance liquidity. This is liquidity that has been building up for the last 7 hours of price. This has been building up for 6 hours. All of these lows are low resistance liquidity that the market wants to draw to. Okay? It's the low hanging fruit of the market. So when you see something like this and then you get a sweep of liquidity, this is a visualization thing that like your eyes got to start understanding. You have to start understanding like what these wicks are here. This is liquidity. This is orders. These are orders here. All of this is orders, right? These are orders all in here. What does the market want to do, guys? It wants to draw in to low resistance liquidity. That means the market's going to move quickly towards it. Okay. So when you're able to identify that stuff on the chart, then your draws on liquidity become very clear. So if we're just looking at this on a straight 5 minute, we can see that the first low down here, like we're all day looking for that low to get pierced, right? Because we have all this liquidity. Like if we're grabbing these orders down here and these orders and these orders, we're definitely going to grab this one too. That's what low resistance liquidity basically is in a nutshell. It just makes the market's going to move quickly towards it. Bing, 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 like a ping pong, right? Once we break through that low resistance liquidity, and there's honestly a little channel being built up there. I don't trade channels much, but if you guys want to, talk about channels, there is a little channel being broke out there or built into there. I'm not a big channel guy, but some of you guys might like that. But anyway, now if we're looking like deeper, like, well, Paul, why are you targeting like this low down here? Okay, so this is a great question. We're targeting this low down here, guys, because this low down here is an internal low. Okay. So the market moves from external liquidity up here to internal liquidity down here. Okay, that looks terrible. Delete that. I hope nobody saves that. But that is why, basically. So we have all this internal liquidity down here. We have all this low resistance liquidity, all of this liquidity, and then the internal low. So you want to make sure that you guys are targeting liquidity pools when you're looking for a trade setup. If you have no draw on liquidity, you have no trade. Okay? Don't you wait for price to reprice to the inverted fair value gap as entry, or just enter on the... No, you can enter right on the close on the inversion. A lot of times on the inversion plays, they don't come back. That's already rebalanced, so it wouldn't if it rebalances again to that area, you're likely wrong. You guys understand what I'm saying? Yeah, he asked a good question there, and I hope that answers it. So a lot of the times, if you get an inverted fair value gap, that means that the price is now basically rebalanced that area. Yes, you will have times when price comes back there, but more often than not, you don't want to see it come back. Like in this example here, this pierced quickly, price never came back. You just be marketing in up here, because honestly, like also this is a cheap trade. Like if you're taking this trade back up into here, I don't know why it won't let me do it on this 5-minute candle. It's kind of annoying, but I would be getting in like right. I can't move this. I would be getting in here at like 044, and then stops would be at the swing high. So it's a cheap trade, you know? I'm always looking to get into a cheap trade with a high RR. No, bro's wrong. Usually price will inverse a fair value gap, then have a break of structure and retrace to back to the inverse. Honestly, man, you could trade however you want to trade that, but no, you're wrong. If it's coming back to retest and inversion, more often than not, you're probably going to get stopped. And that's just from experience. A lot of times, if the trade is correct and you're getting a strong, we're talking about a strong liquidity sweep happening here first, dude. Okay. So if we're getting a strong liquidity sweep, you don't want to see this. You really don't want to see that come back, especially after you get a change in the state. After the 5-minute inverted fair value gaps created, I like to wait for a small retest, then a 1-minute market structure shift. Yeah, I mean, guys, you guys can trade the inverted fair value gaps however you please. And I was just showing people that are uneducated on inverted fair value gaps basically how to trade them. If you guys have a model that works for you, then trade what works for you. I mean, here's a 15-minute fair value gap here too. Now, on this 15-minute gap, which is wider, I would then look for a retest of this gap because it's too, for me, the RR is just going to be like, I'm going to have a stop that's, let's see, 20 points here, which is not terrible actually. But more often than not, this is going to come back into that gap there. You see what I'm saying? A lot of the times when it retests, like you're already getting stopped out of this trade. How do you identify external liquidity? External liquidity is basically a liquidity pool that is to make it simpler, that is to the upside. Why external liquidity is going to be on the inside. So, like for example, you see how these wicks here are on the on the internal side of this price action, or on the inside of it, while this is the external point. I mean, look at it like kind of like I don't even know, like look at it as like, I kind of just go like this to visualize. External liquidity pool right here, highs, internal liquidity lows. Yep. Why the F do you look at on trade on? I don't know what that means, man. You got to speak English for me to understand what you're saying. Do I go to LA Fitness? Yeah, I do. Who is this? Oh, yo, I know you. Yeah, I've seen you at the gym before. No, the video, the recordings will be on YouTube. Yes, Jay and Wayne. Can you explain low resistance liquidity, please? I just did explain low resistance liquidity. All of these lows being built up here on the sell side of the curve is low resistance liquidity. All of this down here, low hanging fruit, I call it. All of this, these, see how the market's like bouncing from these points? The market wants to draw to these liquidity pools. It's low resistance liquidity. So when it happens quickly. Like if you guys see this, how this trade executed, it took all that liquidity quickly. And then like this is one of the most obvious things about, I'm going to show you guys this real quick. Okay, do you guys, this is a really good example. I want you guys to visualize this, right? You guys see what happened here? We left 3 relative equal lows. I will literally bet my entire life savings that at some point in time, these relative equal lows are going to get swept. Whenever you can identify price literally leaving relative equal lows, the market wants to grab that because that means there's orders resting there, right? So in this example here, we have a 1 minute fair value gap. Let me delete the 15-minute fair value gap. You can literally structure a trade, a very cheap trade. I'm going to show you this into the fair value gap first. So you could take this trade setup. I hate when it does that, dude. I really hate when it does that. How do I go back to that bar? Okay. I would enter for a cheap trade. You can take this as a short model, stop loss above the fair value gap, right? TP right down into here. This is actually a decent trade. If this is more of like a scalp, but when you have relative equal lows like that, like it's very, very, very obvious what the draw on liquidity is. That's how fast that works out. Market wants to grab relative equal lows and relative equal highs. Just like up into here, right? The market came up into here, grabbed these relative equal highs here, and then shifted. What kind of video is it if you post it in my Discord? I do use SMT. This trade is built off of SMT. 4-hour SMT on this trade. 4-hour SMT. So we have NQ didn't take a high. ES did take the high. So this trade becomes a very high probability trade setup when we have the SMT at the highs. What am I trading on? This is TradingView, guys. How do so many people not know that? Like, if you guys are just starting trading, make sure you have TradingView. Go into my Discord channel. I have a section called indicators. Inside that indicator Discord, inside of it, I have all the indicators I use on this current chart. So you guys can literally copy what I have. I don't use a lot. I don't use a lot of indicators at all. I'm like pure price action trading and looking for my model. I don't use EMAs. I don't use VWAP. I don't use any of that stuff. I do use volume. I look at where orders are coming in the DOM. But other than that, pure price action. Now you made 4 equal lows. Yeah, we basically made 4 equal lows here. I mean, this low was pierced, but 4 equal lows. Yeah. Do live analysis on the chart, bro. It's literally what I'm doing, bro. Do you use kill zones or macros? I use kill zones and macros. So for my macro tracker, it's actually called macro tracker. It's right here. I use the 950, 1010, 1050, 1110, 1150, 1210, 1250, 110, and then the 250 and 310 macro. It's a cool little thing. It'll pop up on the screen when you're inside the macro hour just to remind you. And if you guys notice, and people say like, oh my God, macros are random. Does this look random to you? Look when price is distributing. When is price distributing? Like, is this random? All 3 macro hours, each macro hour, price distributed. So you want to be trading during those macro hours. That's literally when you're going to get the highest probability setup. So the reason why this trade was so good, this is my favorite macro hour right here. You're in the 950, 1010 macro, and you're just, that's my macro right there. This macro right here is my favorite one. It's where I make the most money. Do you use the 6 sister? I always use ES and NQ together, so yeah, I will know when which one of them is a Six Sister or not. Guys, thank you so much for all the new files on the Discord, man. Welcome in. We are approaching almost we broke 550 members on the Discord. Thank you guys so much. Link is in my bio, of course. If you guys hop in there, then yeah, we'll be able to be trading. So this week, chat, I'm very excited about this. This week, we're running up Top Step. Testing 1 2, testing 1 2, testing 1 2, testing 1 2. Are we back? Chat, are we back? All right, that's so weird, man. I had to like plug my mic back in. What were we talking about? I completely forgot. Testing 1 2, testing 1 2. What was I even saying? Oh, I was saying we're gonna run up Top Step on next week. Top Step is a prop firm. If you guys don't know who Top Step is, they're a prop firm, a futures prop firm trading company, and yeah. Are there macro hours in the Asian session? Yes, but they're not kill zone hours. I don't trade Asia. But yes, there are. So basically, the macro hour is right now. 8:50 is the macro until 9:10. Every top of the hour like that. Guys, welcome into the Cord, man. Welcome into the Cord. Appreciate you. Does anybody want to hop on as a guest and ask some questions? You guys want to hop on as a guest, ask some questions, and we can get into some things? Anybody interested in doing something like that? Or you want me to just yap by myself? Lano requested to join as a guest. Oh, cool. Let's do it. Let me put my headset. Oh, no, you got to do it again. Hold on. Let me put my headset on so I can hear you. Hello, hello, hello. Testing 1 2, testing 1 2. Hello, hello. Can you request to be a guest again? Okay, we got this guy coming on. Yo. Yo, yo. Yeah, yeah. What's up, buddy? Mm-hmm. Yeah. I appreciate it, bro. Yep. Yes. So basically, it's a good question. So like, for example, I like to use 4 hour structure on the candles as well, like open, high, close. I don't know if you're familiar with that, but um, you do normally get that flush at like the 850 to 910, 915 area. So when I'm positioning myself for a trade, um, I'm looking at all of that, like you just mentioned. Like if the 4 hour is closing at that time, if a 1 hour candle, like whatever it may be, but that's the time. Like even if you put the macro tracker on your charts, you'll notice for yourself that within those time frames, price is always like that's when the algorithm starts spooling. So yeah, it's called macro tracker. Look, it's right here on the screen. It's called macro tracker. No, like literally, this is it right here. Yeah, this is it right here. So basically, it'll just show right up on your charts when the macros are in. Like these are the kill zone hours for the strategy. I've been trading for 9 years of trading, but trading futures for 4.